Hey everybody, it's April 8th, 2020, and today I'm going to talk about, is the stock market going to be a V-shaped recovery, or is it going to be something else? That's the question that we've received. But before I get to it, I do have family in New Jersey. My mom painted this. It's a watercolor, and I'm really excited about my mom, proud of my mom. She did a little SpongeBob. SpongeBob's kind of goofy, kind of cockeyed optimist. Many times I can relate to him. These days it's a little bit more difficult, but so today we're going to talk about what type of recovery are we going to have, and does it matter? So I'm going to go through all the letters, the possible types of recovery. I'm going to show you some real recoveries. But the reason I think I really showed you this picture first is that the pictures that we're seeing every day have a lot to do with what we believe and what we feel. And I thought it was very interesting the other day. I have a number of monitors in the office here. So on one of my monitors, I always have CNBC up, and the red will flash. My heartbeat doesn't go up anymore because they have breaking news so much. But if you look at this right here, coronavirus live updates, U.S. tops 10,000, mortgage industry on brink of complete chaos. Then you look down here and you see that the S&P 500 that day was up, nearly 6%. So sometimes I almost think that the news media is trying to frighten us. Now why would they do that? Well, the chances of somebody clicking on this breaking news is a lot higher than the chances of somebody, clicking on something that says, breaking news, investors should stay with their investment and financial plan. I mean, who's going to click on that? So anyway, let's talk about the V-shaped recovery. So you can see the letter V here. It's down and then up. So this is what everybody always hopes for. Now, if you are a retiree and part of your money is in equities, because we're really talking about the equity portion, bonds had a very little V, and some of the bonds, the treasury bonds, actually just went right up. So I don't know what that would be, like a check mark maybe? Check mark down a little bit and then right up? I don't know. Anyway, so the V-shaped recovery is the one we're all hoping for, and I think for retirees, the V-shape is a good idea. So let me actually show you the most recent V-shaped recovery that we've had in the stock market. And I pulled the dates 10/1/2018 through 3/31 of 2019, very recent. And so what we see here, it's not quite a V-shape. I said it started to look a little bit like Texas here. But this is the recovery that happened. If you remember, you might not even remember why this happened, but October of 2018, whammo, the market started going down. I remember December 24th, a number of my clients actually contacted me on December 24th to ask me what's going on. Peak to trough, it was 19.9%. This is showing about 19%, but there was a couple other days, I guess, which were higher. But anyway, this is what we would call a V-shaped recovery. It's not a perfect V, but it goes down, it hits the bottom, and then comes back up. So one of the things you often hear on TV by people that want to sound smart is they say, we need to retest the lows. We need to retest the lows, the 200-day moving average, this, that, and the other. Well, everybody here was, when the market started going back up, was saying we need to retest the lows. We never did. That's what a V is. So what is a retesting of the lows? Well, it could be a W. Okay, so it could be a W, could be the retesting of the lows. Because you go down, you come back up, you go down, and then you come back up again. Now, we're assuming in all of these that we're going to have a market recovery, and if we own a diversified portfolio of equities, that we are going to have a good recovery. So I'll get to what is better, a V or a W for accumulators. Now, the rest of the time, I'm going to be talking about accumulators, people that are investing. Every 2 weeks, maybe they take money out of their 401k, or they have a longer time horizon with their money. Is it better to have a V? Is it better to have a W? Is it better to have a U? But before we get to those three, let's go to the L, loser. I don't know how to do it. Loser in 3D. Anyway, so the L is what everybody really fears. And so the L means that the stock market goes down and just stays down. I mean, this L here, at least it has a little uptick here. This is more the loser L that everybody is afraid of. The market will go down and never come back up again. Yes, the L would be devastating. And the L did happen a couple times in history. It happened if you were a Russian investor when the stock market went to zero. And I can't think, I've only had half my cup of coffee here. It's happened with other markets, but if you own 8,000, 9,000 companies in all markets, chances of an L happening, I think, are low. Now, L is also the zombie apocalypse. If everything goes to hell in a handbasket and the zombie apocalypse happens, the worst case scenario, maybe we could have an L. But for the rest of us who still believe that the world will return, although maybe not today, but will return to some normalcy, we deal with the V's, the W's, and then the U. So the U is the other one that analysts will talk about. So you can see that a U goes down and kind of nicely bottoms and then comes back up again. So now I'm going to argue that the U is actually the best way to go. Okay, the U would be the best for accumulators. Now let me tell you why. Okay, let's say that this U is really wide. Okay, so right now it goes down. We're in 2020, and your retirement date is 2035, 15 years from now. And so what ends up happening is you're depressed with your portfolio as it goes down. You're depressed, and you continue to dollar cost average, or you continue to buy stocks. This is the reason why we say stick with the plan. It's great to stick with the plan. And all of these years from 2020 to 2034, markets stink. You get depressed. I'm depressed. We're all depressed. And then in 2035, you retire, and actually the market seems to spike when you retire. This is called buying low, and then you start to sell high when you get towards retirement. Now, maybe you'll sell a little bit more before you retire, but anyway, you get the point here. So the U is actually the best for accumulators. The V kind of stunk because going back to looking at our real chart here is that when markets started to go down, and I know my wife and I, we buy every 2 weeks. We were buying. Oh, the market's going down. Good. We're buying at a lower price. Too late. We missed it. And then when we come to today, which let's see here, we're in April of 2020. So let's see if I can get this to come up quick. I cannot. Well, it's because it's going to May. That makes sense. All right. So let's try April 7th. So what happened here is that we ended up buying a lot at higher levels than we are today. So when markets go down, I know it's hard to believe, but this is the difference between Warren Buffett and Panic Paulie or Panic Pablo or whatever rhymes or goes with panic. But Warren Buffett sees when prices go down that they're more interesting. So this kind of starting to look like a W now, really wacky W. But anyway, so a U would be the best. V would not be the best. A V recovery would not be the best because we are accumulating and we're buying most of the time at higher levels. The L would be devastating. The W is more likely what usually happens. These people that have said that the market needs to test a low, that's true many times. Now this is the problem with investing. This is absolutely the problem with investing. Is every day we wake up, there's lots of opinions. There's lots of people. I'm pulling this up right now. Carson Block's Muddy Waters takes short position. So somebody is shorting the e-health marketplace. So they're shorting stocks, which means they're betting against the market. So this person comes out and says, "Look what I'm doing." Barclays is saying there's a chance of an L-shaped recovery right here. So you know, we're seeing all this negative news every day. We're seeing this news every day. We see which ones are the biggest movers, which ones have really stunk. We see this every day, and this is the last thing that I'll say, that there is an absolute correlation with those that check their account balances and those that check the news, that the part of the brain, the amygdala, and the insula, and the part of the primitive brain gets lit up. And this is not my opinion. This is the opinion of behavioral economists and behavioral finance people. Part of that brain gets lit up. The more you look at it, the more it gets lit up. The more you look at your account. In March of 2020, we learned yesterday from a DFA conference that half the days were up in March and half the days were down in March. And half the days were down a lot. And, well, not half the days. I think it was 5 days were down more than 4% and 5 days were up more than 4%, something like that. But if you watch your account in a hyper vigilant way, in short term, it's going to be more difficult. And sometimes I am very guilty of this because I get a call from someone and they say, "Do you see what's going on with the market?" And they mean it in a friendly way. And I say, "No." And they're like, "It's up big." And then 10 minutes later, somebody will say, "Do you see what's going on with the market?" And I'll say, "No." And they'll say, "Well, it lost all of its steam and it's now down." And I'll say, "Oh, so I become a monitor or somebody that starts to monitor things as well, and it's not healthy for any of us." But the V-shaped recovery, if you have a belief that the future will be better, will probably happen. A U-shape, again, for accumulators would be best. A W is probably the most likely, and probably the most likely, if you look at history, is that if we go back 25 years, we look at history, probably these V's and W's don't really matter so much when we get out there to long periods of time. Anyway, didn't mean to make this video too simple, but I think the key right now and going forward is just to stick with the plan. If it is a V, okay. If it's a W, okay. If it's a U, okay. If it's an L, we probably have bigger fish to fry than worrying about our investments. So anyway, thanks so much for watching. Love your feedback. Love anything that you have to comment, and please send us more questions. We really prefer to answer your questions rather than come up with ideas ourselves. So thanks so much.